Outperformed so far this week, that small cap trade. So the Russell 2000 is up nearly 5% in 3 days. And our next guest now says the stage is finally set for those gains to actually continue with some momentum. For more, let's turn to portfolio manager of the Needham Small Cap Growth Fund, Chris Retzler, who joins us here on set this Thanksgiving Eve. Chris, thank you very much for being here with us.
Thank you for having me.
All right, so let's talk about the small cap trade. You say that it does now have a setup for continued momentum. What exactly has changed in the last 6 months that now says it can be an outperformer for the coming months?
Well, we certainly have the Fed behind us, and we've gotten through another correction here in November, which began to feel a little bit like the spring, but it feels like we've come out of that in the last few days. But what we have, Fed cuts. I think looking to 2026, as your previous guest just mentioned, we're looking at tax cuts that are going to be for businesses, for consumers. So we begin to see and hope that the market will begin to expand out, the breadth will, expand, and we're going to see more money going into investment, which begins to help more the mid, small cap companies. And if they can get that top line acceleration with their revenue, we think that that drops to the bottom line for a lot of companies.
Now, Chris, small cap stocks have been viewed, conventionally speaking, as quote unquote riskier from a relative basis. That also means higher returns, higher volatility at times. What exactly do you think catalyzes investors towards more risk appetite to go into those small cap names with more certainty?
So with the Fed cutting, one thing that we think is there's going to be liquidity coming into the market, and small caps should be a beneficiary of those dollars coming in. You've had the Mag 7, a lot of dollars have flowed there really over the last 3-4 years, outperforming small caps. That's been a cycle with the Fed raising rates. We're now at a critical point where if they get low enough, are you willing to accept that in your money market rates, or do you have to go out on the risk curve? We think that begins to happen. They trade a lot less liquidity, so it doesn't take a lot of money to flow into the asset class. We just were in California the last week, met with probably 40 companies, and if you had turned off the news, you wouldn't know that there was any slowdown in the tech world. They're looking to meet capacity. That's their bigger issues. The orders keep coming in. We haven't really seen a setup like this, I think, since kind of 2019, 2020, when small caps had a really big move.